Welcome back. One of the stocks which has been buzzing in today's trading session, bucking the overall selling trend, is Delhivery. Remember, the stock has seen a decent recovery from its 52-week low after the stock had seen a lot of underperformance. A lot of brokerages turning positive on the stock as well. They've introduced their new service called Rapid Commerce, designed to offer sub-2-hour deliveries. It's debuted in Bengaluru and already handling more than 300 orders daily. So to discuss the potential of this business for the company and what it can do for overall volumes, we have Ajith Pai, who's the Chief Operating Officer of the company, joining in. Thanks a lot, Ajith, for joining in. 2 hours is also a lot in the world of quick commerce, but be that as it may, everyone wants everything quicker. So the first obvious question then is, what is the total addressable market of this service? How big can it be in terms of revenue for you? And secondly, will this be cannibalizing your e-commerce deliveries already? Is this an addition to your e-commerce business, or is it a replacement?
So thanks for having me on the show. So I think the way we look at it is that it is an additional product to the array of e-commerce services that we already provide. There is already a large TAM so far as e-commerce is concerned, and within that specifically, brand and D2C commerce has been growing the fastest. We believe that this service will enhance the value that D2C and brands can provide to their customers, and hence overall it will be a part of that market. We do also think that faster delivery will help brands and retailers grow e-commerce faster than it has been, and hence it is an addition. It is overall, over the longer term, it should add to the growth rate of e-commerce.
Ajith, good afternoon. Thank you for joining in. How much is the expected scalability of this service? To what potential do you wish to take it to, and the revenue, the maximum revenue that you can generate from this?
Yeah, I will not comment on revenue or on numbers, but I think from our perspective, the objective is to scale this service very quickly over the next few months to all of the metros to begin with. We've started with Bengaluru, as you mentioned. And we believe that the first first outlook will be to scale this quickly to all of the metros within a period of a few months.
What we're trying to understand here, Ajith, is that say you got X rupees from e-commerce. Will this be, in lieu of that X that was declining because of quick commerce, etc., or will it be ahead of that? If you could give us that sense. And in terms of metrics, yes, this provides better value to your D2C clients and your e-commerce clients, but does it, turn better profits for delivery as well? Because you are likely to invest in this. What is your internal ROC sort of EBITDA margin target for a business like this?
Our margin targets for a business like this in the slightly longer term would be similar to the margins that we generate on e-commerce logistics in general. In terms of what this impacts, this is actually something which will grow same city deliveries, which is a portion of the deliveries that are done on e-commerce. So roughly about 15 to 20% of all e-commerce deliveries are done same city from warehouses on the outskirts. That is the part I think that this will sort of impact. We do believe that this will add to the growth rate so far as e-commerce is concerned, and within that specifically for same city.
So if you could give us some numbers, how much does e-commerce contribute to your overall mix right now, and how much can this service add to that?
I will comment on the first part, I think, because that is public information. About 55 to 60% of our revenues come from e-commerce logistics. That's right. That's the figure.
But Ajith, has there been any quick commerce impact on the overall business? Because there has been a huge surge in when it comes to quick commerce. There's rise in competition, more players entering the market. Has there been any impact that you have seen on ground when it comes to your business because of quick commerce?
It's impacted us far less because of the categories that we serve and the kind of e-commerce orders that we serve. I think we had already pointed out that there are categories like grocery which have been significantly influenced by quick commerce offerings. The impact outside of those categories has not been something which is very high. That said, I think the fact is that customers do want faster deliveries. Brands do believe that across categories there is a value proposition in terms of providing a superior buying experience as well as a greater control on customer loyalty with faster deliveries, and this is an attempt to address that.
All right. What we thought earlier of QCOM as grocery and food itself is now expanding even to electronics and a lot of other categories as well. So let's see how that plays out. But as that happens, you have the data of the third quarter. What were the express volumes like in the third quarter? If you could give us a rough sense, and what are the targets that you have for the next couple of quarters as well?
Look, I think we have our results and the analyst call coming up within a couple of weeks. So I will I will wait for that to answer that question. But suffice to say, I think we are fairly satisfied with where things have been in the third quarter.
Okay, so does that mean you will be EBITDA and profit positive in the third quarter? Obviously.
No comments.
No. Let me try this another way. In the previous quarter, the second quarter, which is public information, your express parcel volumes grew by about 2.5%. The revenues grew by about 7%. Typically, the third quarter, you see double-digit growth in the express parcel revenue and mid to high single-digit, if not low double-digit volumes in express. Would that be a correct assessment, or would you give us some directional numbers? We're not asking for specifics.
No, I don't think it's the right time to sort of talk about that, given that the results are just a few weeks away. So I think I would not comment on that right now.
All right, Ajith, thank you so much for sparing time and joining us today. Wish you good luck for the new offering and for the rest of the year as well. The management of Delhivery on their new offering. The stock currently trading a percent higher at around 335, still well below its IPO price of 487. The time for a short break then, but before we do that, here is some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips, just as Mangalam's doing right now. And you can download the app from the Apple Store or the Google Play Store right away.